Good morning, everyone. This is Brad Matheny. Today is the 14th. Where am I going? Right here. This is the Plan Your Trade video for the 14th. We saw pretty decent rejection take place yesterday in some of the markets. I'm going to take a look at it. We had an inside breakaway call yesterday in bearish trending mode. You remember yesterday I talked about the hostility in the global markets related to the debt credit market, and we saw a pretty solid move yesterday in the markets, attempting to recover. Pretty solid downward day in the dollar. Could be looking at some sort of a momentum shift here as we move closer to the inauguration. So again, I talked about how you notice we came down off of this level, rallied back up yesterday. This is good, solid rejection on the SPY. And if this holds, we may continue to see a rally back up into this 594, 595, 596 or higher area right before the inauguration. It could be, a pretty solid, aggressive kind of a move to the upside going into the inauguration, which remember is still a week and a half or so away. And it all kind of depends on how this plays out, whether or not this deep low rejection is going to play out. Now, this deep low rejection is happening across a lot of assets. So let me come in here and show you, try to mark it in a different color. We'll mark it as a very light blue. Yeah, very light pink, maybe. Okay, purple, yellow. How about a light yellow? There we go. Okay, so we get this new low rejection. And this new low rejection continues to play out over here, and over here, getting deeper and deeper lows while we're getting deeper highs. So be cautious that we could end up moving into this downward kind of a floating zone. Notice we get the same thing here on the QQQ, and I'm going to bounce around a little bit to show you. Notice we're getting the same types of lows here on the QQQ. Deeper lows. We didn't quite get the rejection yesterday on the Qs. So we could end up having some sort of a rotation like that. Now, we have a range here that we have to be fairly aware of, in the sense that we're not getting that broad rotational low rejection here. Now we come over the NASDAQ, you can see that we've got the same type of fairly broad lows setting up like this. And again, lower highs coming down, maybe a lower high over here. So you get the idea now that we're getting this rolling kind of a trend looking for some support. And really, if we come in here and we take a look at the width of this, you can see that, from back over here, from back into this rejection point, recent rejection points, we're moving into that 50-60% area right over here, right over in that pullback range, which is right over here in this 50-60% area, which is considered fairly deep. Okay, so if we were to get some sort of a rotation to the upside here, it would come after we see a fairly solid pullback down into this 50-60% area. This is where I would expect it to actually take place. And this is why I think this is so important, as we're seeing this across, various asset classes. Okay, the Dow Jones, very deep move. You can see we've already come way down into these lows from this rejection point to that rejection point. We've come down to the 97% level. This is typically what's called a double bottoming type of formation here, coming across here. It's not exactly the exact low, but the 97 level is a unique Fibonacci level that shows up periodically during a double bottom. We filled the gap back over here, had kind of a flush out low in this case. We could see a good solid move. When you look at this move, again, moving back into the 60 to 50% area, back up in this area, would not be uncommon to see this move back up into this area. The Dow Jones has been under quite a bit of pressure. These are big blue chip stocks compared to the S&P and the Nasdaq, and we'll see how it plays out. Like I said, weakening U.S. dollar and yields giving up a little bit would likely be very solid to the upside for the market. So as we're going through this, again, let's take a look over here at the SPY cycle patterns. We're looking at a Harami inside day to day in carryover mode. We are in bearish trending with bearish biasing. A Harami inside day is normally a fairly flat sideways day. Uh, I don't expect much after yesterday when you see what actually happened yesterday and the fact that we're opening a bit higher. We do have news today, so we could get some sort of a rally. But again, I kind of think the 584 level, maybe 585, 586 level would be about it. So right over kind of in this area, you know, really kind of in this area here, probably be about it for the market today. I don't see it moving quite a bit higher than this. Okay, so let me get rid of some of these and that. And I think we're okay. Okay, so now under the QQQ, we talked about that same type of scenario. I think we get a recovery move today, more so like an inside bar, probably moving up into this 508, 510 area, kind of in this area here. I don't see that we're going to get a huge big move here. We're 506.61. I think we're going to get a moderate recovery today, but I think it's going to move into this area, kind of just rolling back into this middle downward channel, and we'll see how this plays out. We keep getting these deeper lows. It's because of the pressure on the markets. It all started around this time frame, right before Christmas. This big breakdown bar was yields basically disrupting the market, and until that settles, we're going to have this downward kind of a bias, in my opinion. Okay, gold and silver. We're looking at a gold and silver pattern today of a flat down. So you can see they're kind of aligning the gold and the SPY cycle patterns. So we're looking at kind of a flat down after yesterday's selling. I am expecting gold and silver to try to make another move back up over the next day or two. I think that's a logical move here in gold and silver, but a flat down pattern would mean that we're probably going to stay within this range unless we get some big break in the dollar today. If the dollar continues downward, we could see some sort of a big upward move, but I think it's coming over time. I think gold and silver are going to be moving to hedge risks, and I think that's a very important side going forward. So the other thing that I thought was interesting yesterday was that if I come back over here, that am I on the right one? I am, but wrong interval. So here's the breakdown with the reversion. I mentioned this to you. This is my other chart, but I noticed yesterday that, XLB was really a big move, accumulation to the upside. XLE, big move to the upside. XLV, healthcare, big move to the upside. It looks like we finally turned the corner. XLP, consumer staples, not quite. XLI, big rotation to the upside yesterday, and utilities were down. So, we had a fairly solid kind of reversal here in trend. And what's happening here is I think we've moved into that through that, devaluation phase after the election, which came right here. We bottomed. We've kind of had this double basing bottoming formation, and now we're into that rally mode. So again, I think we're looking at a pretty solid recovery. And of course, energy moving higher. This is a big issue. We need to see energy stall back out over here in this 92, 93 area. That's pre-election area. We're getting right back into that area right now. We're up just a little bit today. But basic materials, I need you to understand that, basic materials have a chance to come back very strongly up into this 90, 91, 92 area. Pretty solid move after this big washout. Here's the election, here's the rally, flutter, flutter, huge decline, absolutely huge. And now I wouldn't be too surprised to see it move up into this 90, 91 area. And like I said, as traders, you can pretty much focus on the spider sectors and have a ton of opportunity. Okay, I mean it's all right there for you. Let me get rid of these updates. Okay, lastly, we're going to go over here and look at Bitcoin. Bitcoin, again, similar, very similar setup to what we're seeing in the Dow Jones and such, in the sense that we've got this big breakdown, flush out low that rejected yesterday. So, of course, rejection without getting a close down below this level suggests that we're going to see some sort of another attempt back up. We can easily come across this level to this high and project again some sort of a target level over here, somewhere around that 100,000 area. Very likely to see some sort of, again, a flagging formation back up into this 99 to 100,000 area that may play out into a breakdown mode again or into some sort of extended trending. Now, I do believe that we're moving towards the inauguration, which is about right here. And I think we're going to be moving upward into the inauguration, but it really does plan to play out how we move through the new president and the new laws that are coming. So, I mean, right now, this is looking like it just wants to melt upward for the next 4, 5, 6 days, and without any disruption, I think we're going to just be a melting upward, a melting we will go, so to say. And gold and silver will probably recover back up into, like I said, this 2720, 2740 area for gold, and silver back up into this 31, 3150, 3170 potentially for silver, just melting back upward, hedging risks going into the election. We could get some really big moves in gold and silver right around the inauguration, but again, that would be hedging major risk factors. Okay, guys, that's it for now. I'm going to leave you back over here on the SPY chart. And remember, we're looking for a bit of a follow through, not a big day today, but a big follow through. Remember, we just got done with a base pattern yesterday on the 13th. We had a base pattern. I don't know if you remember this. Let me come in here and find them. There we go. Base pattern, January 13th, basing, moving into a January 18th top, and major top pattern moving into a January 20th peak. So, given that time frame, we're looking at the 18th, which is the weekend, setting up a top. So, we're kind of looking for some sort of a topping formation right here, somewhere in that area. Okay, in that time area, the x-axis, the y-axis is price over here. So we're looking for some sort of a top over here, Could be up into 595, 596, 598, could be up here at 602. Don't know. I'm suspecting that it's going to be over here in this 594, 595 area, which I will leave that right in here. And that's going to be our next topping pattern. So we're looking at a pretty solid rally phase in the next 4 or 5 days, I think, in the markets. Okay, guys, that's it for now. I'll talk to you later.